Hey guys, welcome back to another video. Today we'll be taking a look at CVS Health Corp. Taking a look at their overview now, we're going to look at their PE ratio. So currently it's at a 17.29, which is always a nice first sign to see. The goal is to look for companies with a PE of about 20 or less, as it's an indicator of how overvalued a stock might be. Now, seeing if they offer any dividends, they currently have a yield of 2.02%, which comes out to 50 cents per share. I always like to see when companies issue dividends to shareholders when given the opportunity. This allows for you to collect extra passive income. Moving into the income statement now, we're going to start off by looking at their revenue. So as of the most recent year, they're bringing in 268 billion, which is up about 91 billion from 2016. So now we're going to take a look at their net income. So the net income is looking just as good, except they did have a dip in 2018. The last 2 years, they seem to be back on track, so I wouldn't be too worried about it, especially if the year coming ends up being good. The last thing to look at on the income statement is the shares outstanding. This is something you want to see decrease, as the more it goes up, the less your shares are worth. As you can see, it was starting to go down, but recently they've been issuing more shares. This is not good, but I wouldn't consider it too bad as they haven't been doing it at a high rate. Moving into the balance sheet now, we're going to look at their current assets. So as of the most recent year, they're at 56.37 billion, which is up from the 31.04 billion in 2016. So this is an increase of 82%. Going into the future, we can assume that this will keep going up based on how consistent they have been. Next is going to be the current liabilities. They're currently at 62.02 billion, which is not too good to see as this shows they have more current liabilities than current assets. It's also not good to see that they've been growing at almost double the rate at 136% over the past 5 years. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends, so this is clearly something you need to see be improved on year after year. So as you can see, it started off a little rough as it was decreasing down to 6.09 billion, but over the past 3 years they've been able to pick it up, so this is a really good sign to see, and hopefully they can continue to keep doing this. In conclusion, CVS has some decent financials. Some criticism I would like to give to the company going forward is that I want to see them have more current assets than current liabilities. I also want to see them start buying back shares, which is something I'm confident they'll probably start doing in the near future. When it comes to buying this company, I would probably wouldn't be interested until it falls between the $75 to $80 range. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all of the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on this stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.